Question 1. Lena has a disability insurance policy that pays her $2,500 a month. After being disabled for 3 months, Lena receives a letter stating her benefits have been reduced to $1,800 per month. What is the most likely reason for this reduction? A. Lena did not meet the total disability requirement. B. Lena was overpaid initially and the excess was adjusted. C. Lena's employer is now paying portion of her wages. D. Lena is receiving income from another disability insurance policy. Answer. B. Lena was overpaid initially and the excess was adjusted. Explanation. This situation likely involves an overpayment adjustment. If Lena's initial benefit payments exceeded the policy's maximum benefit, or if she was receiving income from other sources, the insurance company would reduce her payments to reflect the proper amount. Question 2. Mr. Johnson has a long-term disability insurance policy with a 180-day elimination period. He is diagnosed with a chronic condition that significantly impairs his ability to work, but is still able to perform light duties for less than 20 hours a week. Under his policy, the definition of disability is monoccupation. What is the most likely outcome for Mr. Johnson? His benefits will be paid immediately as he is disabled according to his policy's definition. B. He will not be eligible for benefits as he can still perform some work duties. C. He will receive partial benefits due to the reduction in work hours. D. His benefits will be delayed until he can no longer work in any occupation. Answer. C. He will receive partial benefits due to the reduction in work hours. Explanation. Under an monoccupation definition, the policy considers someone disabled if they can no longer perform the duties of their own occupation, even if they can still do other types of work. Since Mr. Johnson can perform light duties but is significantly impaired, he may qualify for partial disability benefits. Many long-term disability policies provide partial benefits if the insured can still perform some duties in their occupation, but the work hours are reduced. As such, Mr. Johnson will likely receive partial benefits based on his reduced capacity to work. The elimination period applies, meaning the benefits would start after 180 days, but partial benefits are typically considered when the policyholder is still capable of working in a limited capacity. Question 3 scenario. Samantha, a high-risk construction worker, is diagnosed with a severe back injury and is unable to perform her duties. She has a group disability insurance policy provided by her employer. However, the policy has exclusions for back injuries caused by pre-existing conditions. Samantha was diagnosed with back problems 2 years ago but had no issues with work until now. What should Samantha do to address her situation? A. File the claim and hope the insurance company does not notice her pre-existing condition. B. Seek legal advice and explore options for appealing the exclusion clause in her policy. C. Accept that her back injury will not be covered and attempt to return to work as soon as possible. D. Ask her employer to provide a separate disability policy that covers back injuries. Answer. B. Seek legal advice and explore options for appealing the exclusion clause in her policy. Explanation. Exclusions related to pre-existing conditions can be a major barrier in disability claims, but they are not always enforceable in every situation. In Samantha's case, since her back injury occurred after her initial diagnosis, she might be able to challenge the exclusion clause, especially if it was not properly disclosed to her. Legal advice can provide her with insights on whether the exclusion is enforceable or if there are grounds for an appeal. Disability insurance policies often contain specific rules about pre-existing conditions, and policyholders may have rights to challenge these clauses or negotiate coverage based on different circumstances. It's critical to ensure that exclusions are applied correctly according to the policy's terms, and Samantha should investigate if the condition truly qualifies as pre-existing under the terms of her policy. Answer. B. COLA adjusts the benefit amount annually to match the rate of inflation, typically up to a specified limit. Explanation. The COLA rider is an optional feature in many disability insurance policies that helps protect the purchasing power of the policyholder's benefits by adjusting the monthly benefit amount for inflation. This adjustment typically occurs annually, and the percentage of the increase is based on inflation, often tied to the Consumer Price Index, but subject to maximum percentage increase or cap. Not all policies include COLA by default, and it usually comes at an additional cost to the policyholder. Question 4. Which of the following is true about the cost of living adjustment COLA rider in a disability insurance policy? A. COLA increases the benefit amount by a fixed percentage every year, regardless of inflation. B. COLA adjusts the benefit amount annually to match the rate of inflation, typically up to a specified limit. C. COLA is automatically included in all disability insurance policies without additional cost. D. COLA only applies to short-term disability policies and not long-term disability policies. Question 5. In the context of disability insurance, which of the following is considered a residual benefit? A. Benefits paid if the insured is unable to perform their occupation but can still work in another capacity. B. A benefit paid to the insured when they reach retirement age after the disability claim ends. C. A portion of benefits paid when the insured is able to return to work but suffers a loss of income due to the disability. D. A one-time lump sum payment made to the insured for permanent disability. Answer: C. A portion of benefits paid when the insured is able to return to work but suffers a loss of income due to the disability. Explanation: Residual benefits are designed to provide partial income replacement if the policyholder can return to work but at a reduced capacity or with lower earnings due to their disability. This benefit ensures the insured receives compensation for the income lost as a result of their disability. The amount paid is generally proportional to the loss of income. For example, if a policyholder returns to work but earns 50% less than their pre-disability income, they may receive 50% of their total disability benefit. Question 6. Which of the following is generally true about group disability insurance compared to individual disability insurance? A. Group disability insurance policies are typically more expensive. B. Group disability insurance offers more flexible benefit amounts. C. Group disability insurance is usually guaranteed issue with no medical underwriting. D. Group disability insurance benefits are usually not taxable. Answer: C. Group disability insurance is usually guaranteed issue with no medical underwriting. Explanation: Group disability insurance is often provided by employers and is typically guaranteed issue, meaning no medical underwriting is required. This contrasts with individual disability insurance, where the policyholder may have to undergo medical underwriting and the cost can vary based on individual health. Question 7. Scenario: Which of the following best describes residual disability benefits in a disability insurance policy? A. Benefits are paid only if the insured is completely unable to work. B. Benefits are based on a percentage of income lost due to a partial disability. C. Benefits are provided for temporary disabilities only. D. Benefits are provided for disabilities that result in a permanent impairment. Answer: B. Benefits are based on a percentage of income lost due to a partial disability. Explanation: Residual disability benefits are designed for policyholders who are partially disabled and unable to earn their full income. These benefits pay a percentage of the income lost due to partial disability, allowing for partial income replacement. Answer: B. To determine the length of time a policyholder must be continuously disabled before receiving benefits. Explanation: The elimination period, also known as a waiting period, is the amount of time the policyholder must be disabled before they can start receiving disability benefits. It functions like a deductible period, with the insured covering the initial time they are unable to work. For example, a 90-day elimination period means that the policyholder would not receive any benefits until they have been disabled for 90 days. After the elimination period, the insurance company begins to pay benefits. Question 8. What is the primary purpose of the elimination period in a disability insurance policy? A. To reduce the amount of benefits paid during the initial months of disability. B. To determine the length of time a policyholder must be continuously disabled before receiving benefits. C. To limit the duration of disability benefits to a specific number of months. D. To prevent claims from policyholders who are not completely disabled. Question 9. Which of the following is not a key consideration in determining the eligibility for long-term disability insurance benefits? A. The type of disability, G. Injury, illness. B. The policyholder's occupation and ability to perform it. C. The policyholder's age and pre-disability income. D. Whether the policyholder has workers' compensation benefits. Answer: D. Whether the policyholder has workers' compensation benefits. Explanation: Eligibility for long-term disability benefits generally depends on the type of disability. the insured's ability to perform their occupation or any occupation if the policy includes that definition and factors like pre-disability income and age. Workers' compensation benefits, while they may coordinate with disability benefits, are typically not a key factor in determining eligibility for long-term disability insurance benefits. However, other income sources may be deducted or offset from the disability benefits. Question 10 scenario: which of the following would be a typical exclusion under most disability insurance policies? A. Injuries sustained while participating in a hazardous hobby. B. Injuries sustained while on a business trip. C. Injuries sustained due to a pre-existing medical condition. D. Injuries sustained while working in a low-risk occupation. Answer A. Injuries sustained while participating in a hazardous hobby. Explanation: many disability insurance policies exclude injuries that result from high-risk activities such as skydiving, bungee jumping, or other hazardous hobbies. These exclusions are put in place to prevent claims related to activities deemed too risky for the insurer to cover. Question 11. Which of the following is true about own occupation disability insurance policies? A. Benefits are paid only if the policyholder cannot perform any job for which they are reasonably suited. B. Benefits are paid if the policyholder is unable to perform their own occupation, regardless of whether they can perform other work. C. Benefits are paid only if the policyholder is unable to perform any job in the economy. D. Benefits are paid for the first 12 months if the policyholder is unable to perform any job. Answer B. Benefits are paid if the policyholder is unable to perform their own occupation, regardless of whether they can perform other work. Explanation: own occupation policy provides benefits if the insured is unable to perform the duties of their specific occupation, regardless of whether they can work in another capacity. This type of policy is often more beneficial for professionals like doctors, lawyers, or executives who are unable to work in their specialty but may be able to perform other types of work. Question 12. Which of the following is not typically considered a qualifying condition for long-term disability insurance benefits? A. A serious car accident leading to physical injuries. B. A chronic illness, such as multiple sclerosis, that significantly impairs daily activities. C. A temporary illness or injury that only prevents work for a few days. D. A mental health disorder that prevents the insured from functioning at work. Answer C. A temporary illness or injury that only prevents work for a few days. Explanation: long-term disability policies generally require that the condition be severe and last for a significant period, typically several months or longer. A temporary illness or injury that lasts only a few days would not typically qualify for long-term disability benefits. However, chronic illnesses, serious accidents, or mental health disorders can all qualify depending on the policy's terms. Question 13. John has a disability insurance policy that includes a guaranteed renewable provision. After a few years, his insurer increases the premium. Can the insurer cancel John's coverage or refuse to renew it? A. Yes, because the insurer can increase premiums at any time. B. No, because the insurer must renew the policy as long as premiums are paid. C. Yes, because the insurer can cancel the policy at any time. D. No, because guaranteed renewable policies do not allow changes to premiums. Answer B. No, because the insurer must renew the policy as long as premiums are paid. Explanation: a guaranteed renewable provision ensures that the insurer cannot cancel the policy as long as the policyholder pays the premiums. However, the insurer can raise the premiums, though this typically applies to all policyholders in a given class or group, not on an individual basis. Question 14. Which of the following factors can cause a reduction in disability insurance benefits? A. If the insured receives workers' compensation payments. B. If the insured has not paid the premium on time. C. If the insured's policy is a group policy provided by their employer. D. If the insured is older than 65 years of age. Correct answer A. If the insured receives workers' compensation payments. Explanation: disability insurance benefits can often be reduced if the insured is receiving other income, such as workers' compensation benefits, to prevent the policyholder from receiving more than their actual income prior to the disability. This is called the coordination of benefits. Question 15. Which of the following best describes the waiting period in a disability insurance policy? A. The number of days after a claim is submitted before benefits are paid. B. The period during which the insured must be employed before benefits can be claimed. C. The period of time between when the disability occurs and when the benefits begin. D. The time limit after which benefits are no longer available to the insured. Answer C. The period of time between when the disability occurs and when the benefits begin. Explanation: the waiting period, also known as the elimination period, is the length of time the insured must wait after the disability occurs before they start receiving benefits. This period is typically anywhere from 30 days to 180 days, depending on the policy. Question 16. Samantha is a lawyer who suffers a severe back injury. Her disability insurance policy includes an own occupation definition of disability. However, Samantha is still able to perform other legal tasks such as consulting, although she can no longer physically represent clients in court. Which of the following is most likely to apply to her benefits? A. Samantha will receive full benefits because she cannot perform her exact job duties. B. Samantha will not qualify for benefits since she can still perform other legal tasks. C. Samantha will qualify for partial benefits because she can no longer perform all duties of her occupation. D. Samantha will receive benefits only if she can no longer work at all, even in a different occupation. Answer A. Samantha will receive full benefits because she cannot perform her exact job duties. Explanation: under an own occupation definition of disability, a policyholder qualifies for full benefits if they are unable to perform the substantial duties of their own occupation, even if they can perform other tasks within their profession. Since Samantha can no longer physically represent clients in court, which is a key part of her legal job, she would typically qualify for full benefits under this definition. Question 17. Which of the following is typically excluded from coverage in a disability insurance policy? A. Injuries sustained while participating in high-risk activities such as skydiving. B. Illnesses that develop after the policyholder purchases the insurance. C. Disabilities resulting from childbirth or pregnancy. D. Disabilities resulting from a car accident. Answer A. Injuries sustained while participating in high-risk activities such as skydiving. Explanation: disability insurance policies often have exclusions for injuries resulting from high-risk activities, including extreme sports like skydiving, bungee jumping, or certain dangerous hobbies. Such exclusions help insurers limit their risk exposure. Question 18. Which of the following is true about the total disability definition in most disability insurance policies? A. The policyholder must be unable to perform any work of any kind. B. The policyholder must be unable to perform their own occupation. C. The policyholder must be hospitalized for an extended period. D. The policyholder must be unable to work in any occupation that would provide a comparable income. Answer B. The policyholder must be unable to perform their own occupation. Explanation: in many disability insurance policies, a total disability is defined as the inability to perform the duties of one's own occupation. Some policies may have a broader definition that applies to any occupation the insured is qualified for based on their skills and training, but typically own occupation coverage is more beneficial for professionals. Question 19. What is the primary benefit of a guaranteed renewable disability insurance policy? A. The policyholder cannot cancel the policy for any reason. B. The policyholder's premiums will never increase. C. The insurer cannot cancel the policy as long as the premiums are paid. D. The policyholder can increase the benefit amount at any time. Answer C. The insurer cannot cancel the policy as long as the premiums are paid. Explanation: a guaranteed renewable policy ensures that the insurer cannot cancel the policy as long as premiums are paid. This type of policy guarantees the insured the right to renew the coverage every year, even if their health status changes. However, the insurer may still increase the premiums or adjust the terms for the policyholder depending on the policy's language. Question 20. Which of the following is true about residual disability benefits in a disability insurance policy? A. They are only available after the policyholder has been disabled for 1 year. B. They are provided when the policyholder can return to work part-time but suffers a loss of income. C. They are a one-time lump sum paid when the policyholder recovers fully. D. They are available only if the policyholder is unable to perform their occupation at all. Answer B. They are provided when the policyholder can return to work part-time but suffers a loss of income. Explanation: residual disability benefits provide income replacement if the policyholder can return to work but experiences a loss of income due to partial disability. This benefit is proportional to the income loss, helping the insured during a gradual recovery. Question 21. Which of the following best describes a business overhead expense disability insurance policy? A. It covers the policyholder's personal living expenses if they are unable to work. B. It covers the operational expenses of business if the owner becomes disabled. C. It covers the wages of employees if the business owner is disabled. D. It covers the cost of hiring temporary replacement for the disabled business owner. Answer: B. It covers the operational expenses of a business if the owner becomes disabled. Explanation: a business overhead expense policy is designed to cover the fixed operational costs of a business, such as rent, utilities, and employee salaries. If the business owner becomes disabled, it does not cover personal living expenses or wages of employees specifically. Question 22 scenario: Sarah has a disability insurance policy with a 60-day elimination period. Her monthly benefit amount is $5,000. If Sarah becomes disabled on January 1st and her disability continues, when will she start receiving benefits? A. March 1st. B. April 1st. C. May 1st. D. January 1st. Answer: B. April 1st. Explanation: the elimination period is the waiting time before benefits are paid. With a 60-day elimination period, Sarah would start receiving benefits 60 days after January 1st, which is March 1st. However, payments would typically be made at the start of the next month, so Sarah would start receiving benefits on April 1st. Question 23. Which of the following is true regarding the recurrent disability provision in a disability insurance policy? A. It provides benefits for the same disability even if the insured returns to work for a period of time. B. It limits benefits to a one-time payment for a disability. C. It only applies if the disability results from a different cause. D. It provides benefits for the first 12 months of any disability claim. Answer: A. It provides benefits for the same disability even if the insured returns to work for a period of time. Explanation: the recurrent disability provision in a policy ensures that if a policyholder recovers from a disability, returns to work, and then becomes disabled again due to the same or related cause within a certain period, usually 6 months, the insurer will resume benefits as though the disability never ended. Question 24. Which of the following is typically true about partial disability benefits in a disability insurance policy? A. They are paid only if the insured is unable to work at all. B. They are paid if the insured can work part-time but at a reduced capacity. C. They are paid only for a maximum of 3 months. D. They replace 100% of the insured's pre-disability income. Answer: B. They are paid if the insured can work part-time but at a reduced capacity. Explanation: partial disability benefits are typically paid if the insured can return to work but is unable to perform all the duties of their previous job. These benefits usually provide partial income replacement, typically a percentage of the total disability benefits. Question 25. What is typically excluded from coverage under a disability insurance policy? A. Disabilities resulting from drug and alcohol abuse. B. Disabilities resulting from injuries incurred at the workplace. C. Disabilities resulting from an accident occurring during off-duty hours. D. Disabilities resulting from pregnancy or childbirth. Answer: A. Disabilities resulting from drug and alcohol abuse. Explanation: most disability insurance policies exclude coverage for disabilities caused by drug and alcohol abuse, as these are considered avoidable risks. Other causes of disability, like workplace injuries or accidents, may be covered depending on the policy. Question 26. Which of the following is the main purpose of a cost of living adjustment COLA rider in a disability insurance policy? A. To adjust the monthly benefit amount based on inflation. B. To increase the benefit payout in the event of a major accident. C. To provide a one-time lump sum payment during a disability claim. D. To cover the cost of additional medical treatments during the claim period. Answer: A. To adjust the monthly benefit amount based on inflation. Explanation: a cost of living adjustment COLA rider adjusts the disability benefit to keep pace with inflation. This ensures that the policyholder's benefits maintain their purchasing power over time, even as the cost of living increases. Question 27. Which of the following would be considered a non-cancelable disability insurance policy? A. A policy in which the insurer can increase premiums after a certain period. B. A policy where the insured can choose to cancel coverage at any time. C. A policy that guarantees the insurer cannot cancel coverage or increase premiums as long as premiums are paid. D. A policy where the insured can change the benefit amount during the policy term. Answer: C. A policy that guarantees the insurer cannot cancel coverage or increase premiums as long as premiums are paid. Explanation: a non-cancelable policy guarantees that the insurer cannot cancel coverage or raise premiums for any reason as long as the policyholder continues to pay the premiums. This provides greater stability and predictability for the insured. Question 28 scenario. Mark has a disability insurance policy with a 90-day elimination period and a monthly benefit of $4,000. Mark's disability begins on October 1st and he remains disabled for 4 months. When will Mark start receiving benefits? A. November 1st. B. December 1st. C. January 1st. D. February 1st. Answer: B. December 1st. Explanation: the elimination period is the waiting time before benefits are paid. Since Mark's elimination period is 90 days and his disability began on October 1st, he will have to wait until December 30th, 90 days, to receive benefits. His first payment would be on December 1st. Question 29. What is the main advantage of an non-occupation disability insurance policy over any occupation policy? A. It covers a broader range of disabilities. B. It provides more benefits for temporary disabilities. C. It provides benefits if the insured cannot perform their specific occupation, even if they can work in other fields. D. It provides coverage for disabilities resulting from pre-existing conditions. Answer: C. It provides benefits if the insured cannot perform their specific occupation, even if they can work in other fields. Explanation: an non-occupation policy provides more comprehensive coverage for professionals or specialists. It ensures benefits are paid if the insured cannot perform the duties of their specific occupation, even if they are able to work in another job. Question 30. Which of the following is typically covered by a disability insurance policy? A. Cosmetic surgery. B. Long-term care in a nursing home. C. Disabilities caused by chronic medical conditions. D. Injuries sustained while committing a felony. Answer: C. Disabilities caused by chronic medical conditions. Explanation: disability insurance policies generally cover disabilities caused by chronic medical conditions such as arthritis, diabetes, or heart disease as long as they prevent the insured from working. However, injuries from criminal activity such as committing a felony and cosmetic surgery are typically excluded.